This is Bible School Radio, KDKR Decatur, Dallas, Fort Worth, and KYJC Commerce. Online at kdkr.org. Portions of KDKR programming do not necessarily reflect the views of this station, its management, or staff.
Prudent Money with Bob Brooks is sponsored by the Prudent Money Foundation on 91.3.
Well, the IRS is going to stop unannounced visits to taxpayers. Today we're going to take a look. Stay tuned for Prudent Money. Good afternoon. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. You know I do appreciate it. So why has the IRS decided to stop tax collection visits? IRS expert Dan Pilla is here today to talk about an article that he just published in the National Review. Dan, always good to talk to you.
Yeah, it's my pleasure, Bob. It's always good to talk to you. How you doing?
I'm doing great. A little warm in Texas, but how's it there in Minnesota?
I've heard that. Actually, we've been quite pleasant here the last week, but we've had warm weather too. But it's typical. You know, we get to high 80s, low 90s in August and July, and right now we're in the 70s, and it's good.
You see, I think I'll take my hot weather versus y'all's cold weather.
Well, you can get out of the cold, though, Bob. That's what I keep telling myself anyway.
That's right. Good point. Well, hey, I want to start out with a article that I came across today and get your opinion on it. I think that you'll get a kick out of this one. It says IRS says it's catching more wealthy tax cheats and cutting phone wait times all at the same time. So it's been 1 year since a law earmarked a massive cash infusion for the Internal Revenue Service, and the tax agency says it's making a return on the investment. The first thing that it's done, phone operators were able to assist 3 million more people this year compared to last year, cut phone wait times to 3 minutes from 28 minutes, and served 140,000 more taxpayers in person. The second thing they've accomplished, the agency is also starting to show results from more tax enforcement for high-end tax cheats. Last month, the IRS said it collected $38 million in back taxes from recently closed cases against households worth at least $1 million. So what do you think about that?
Well, let's talk about the phones first of all. You know, so they've increased their phones. First of all, I want to see the data on cutting the wait times from 28 minutes to 3 minutes.
Right.
The wait times never were 28 minutes, Bob. They were the people that got their calls answered was only in the less than 20%. 20% factor. So in other words, out of 100 people that made a phone call to the IRS, only 20 people got the call answered, or I should say fewer than 20 people got their call answered at all. Never mind wait times of 38 minutes. It was, when you use the entire window of the year and not just a snapshot in time, these wait times were horrific. There's no question about that. And it's really the level of service that indicates what percentage of people are being helped. Level of service is a phrase the IRS uses to indicate how many calls were answered, not wait times. Because, you can get your calls answered, that's great. And if your wait time is 20 minutes or 30 minutes, you might say, well, that was painful, but at least I got my call answered. What is horrible is when you're waiting on the phone for 3 hours or 4 hours and you either get cut off or you literally get hung up on, or nobody ever picks up and you just run out of patience and hang up the phone. That's what happens in the vast majority of the time. So the level of service number is really what needs to be looked at, not just the wait times. And it's a good thing to be reducing wait times, no doubt about that. But the fact of the matter is the level of service is really the key number here. And I don't have the latest numbers in front of me here, so I can't tell you what they are. But they have been deplorable over the last 3 years. As I said, fewer than 20%. So out of every 100 people that makes a phone call, fewer than 20% get any help whatsoever. Right? Correct help, incorrect help, rude help, polite help, it doesn't matter. They didn't get any help.
Yeah, I would have killed for 28 minutes if I was going to call the IRS. 28 minutes would have been wonderful.
Yeah. Right. Now, as far as the increase, first of all, I bristle when they use this phrase tax cheat. Whose article is this, Bob?
Market Watch.
Market Watch. So what they do, I don't know where these people get their phraseology from, but tax cheat they use. Well, I know where it comes from. It comes from Treasury Department news releases. That's where it comes from.
Sure.
They pick up the Treasury Department news releases and they just use the same phrases that the Treasury Department. We've captured tax cheats. The overwhelming majority of people in the United States do not cheat on their taxes. All right, when the typical person goes through a tax audit, the audit results indicate that people owe money 88% of the time. But those audit results are wrong between 60 to 90% of the time. All right? So just because somebody goes through an audit and the auditor says, you owe us $200,000, doesn't mean the taxpayer owes you $200,000. When they come up with these numbers, when the Treasury releases these numbers, these are examination function numbers. In other words, they're numbers produced by the audit function. They are not washed through the appeals function, nor are they washed through the collection function. So it's one thing to say that somebody owes you $100,000. It's another thing for the appeals office to say, no, that determination was wrong. The liability is really $10,000. I'll give you an example. See, and they don't count the appeals treatment of these cases when they produce this data. All they do is take examination report data. And I'll give you an example of how skewed this can be. I had two cases in the United States tax court that settled last December. They involved the same taxpayer over 3 different tax years. So 2 years in one case, 1 year in another case. All 3 years revolved around a central issue. I won't get into the technicalities of it, but it was a detailed technical issue that the auditor screwed up on. In the first 2 years, she screwed up on her analysis. In the third year, she didn't even bother to look at the facts. She just took her incorrect analysis from the first 2 years and applied it to the third year. I took the case to tax court. We ended up settling in tax court, Bob. Now, the audit reports, combined audit reports, indicated that my client owed about $450,000. And you'd say, wow, $450,000, this guy must have really cheated on his taxes. Well, as I said, the auditor screwed up the first 2 reports, and she didn't even bother looking at the third one. She just extrapolated her numbers. When I got through with the case in tax court, my client owed a grand total for all 3 years, tax, interest, and penalties, everything added together. He owed a grand total of $0. All right, they conceded everything, Bob, and those numbers will never show up in the data that the Treasury releases about audit reports, because his audit report showed that he owed $450,000. By the time I got done with him in tax court, he owed $0. Nothing. Zilch. All right? And this is the problem with these audit report numbers that come out. They do not take into consideration the fact that these examiners are wrong so often, and that these cases get appealed and they get straightened out in appeals, and these so-called high-dollar quote-unquote tax cheats, which is completely nonsense, don't owe anywhere near what the IRS says they owe, if they owe anything at all.
Well, what's interesting about it is, due to the process being what it is, it's just so easy to cherry pick numbers and make them look good.
Oh, sure. Yeah, absolutely. There's no doubt about it. We got a tax code that consists of over 4 million words that were changed more than 6,000 times just since 2001 alone. How can people can't keep up with this stuff, Bob. Right. And to say that somebody makes a mistake on their tax return and that person is a tax cheat, that's just so outrageous and so inflammatory. And it's by design. They do that intentionally to inflame the passions and prejudices of lower income people against higher income people, specifically to fuel the frenzy for tax increases, which low income, middle income people end up being the ones paying anyway, because there just aren't that many rich people out there, Bob. You know that better than I do. There just aren't that many high income people out there that the IRS and the Treasury Department can continue to fleece in the hope of raising more money to fund their programs.
This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. Do appreciate it. Dan Pilla is here with me, as he is once a month. Every what do we do? Third or fourth Wednesday of every month.
Yeah, something like that.
The web address, if you want more information, internet address, www.taxhelponline.com. A lot of great information there and a lot of free information there, so go check that out. You wrote a recent article for the National Review talking about the IRS deciding to stop tax collection visits. As I read through it, I thought, this is a great article to break down and really look at what goes on in the collection process, what you should do, what you should not do, and kind of the components of it. So let's break this down a little bit, talk about the different players and what they do in the process. So let's start off with the revenue officer. What part did they play in the collection efforts?
Yeah, the functions, the main functions of the IRS, Bob, are broken down into three different divisions. You got your audit division, which we just talked about. Those are revenue agents. Then you got the collection function. These are the people that go out and get the money. Those are called revenue officers. And the criminal investigation unit, the people that actually do the sleuthing and putting together cases for criminal prosecution, they're called special agents. So the focus on tax collection is that of revenue officers. They're the ones that levy paychecks and bank accounts, and they seize automobiles and so on. They're the active tax collection arm of the IRS. We think of the IRS as this giant collection agency, and certainly it is. But there's only one limited aspect that's actually involved in physical collection, and those folks are revenue officers.
And talk a little bit about the automatic collection systems process that they have. People don't realize that most of everything that they get is generated from a computer.
Yeah, that's exactly right. And you know, under the umbrella of IRS collections, yes, you've got different elements of it. When I talk about a revenue officer is a living being with a heartbeat. At least I believe they have hearts, and these are the ones, Bob, that knock on the door, and they physically issue the bank levy or the wage levy. They physically seize an automobile or you know, some other asset. These revenue officers are involved in high dollar cases. Generally, if the tax liability, the amount owed, not the amount claimed, but the amount actually owed, when that's over $100,000, then you get involved in a live revenue revenue officer. But the vast majority of people that owe money to the IRS don't owe $100,000, Bob. They owe under $100,000. All right, and so those folks are not handled by revenue officers. They're handled by what's called the Automated Collection Site, ACS. The IRS has about 8 or 10 ACS centers around the country, and these are the people that automatically issue wage levies and bank levies. They automatically issue the collection notices. They automatically issue the statements and so on that come to people. And this is done through as you just said, through the computer process. So if you owe the IRS $50,000, for example, you are not going to get a knock on the door from a revenue officer. You're going to get notices in the mail. Dear taxpayer, you owe us this, you owe us that. Dear taxpayer, you didn't pay. Dear taxpayer, we've sent you prior notices and you ignored them. Dear taxpayer, we're issuing a wage levy, we're issuing a bank levy. That's all generated through ACS, the automated collection sites from around the country. It's an automated process. So, as I said, the vast majority of people never do see a tax collector face-to-face. They're getting all this crap in the mail, Bob.
Yeah, and they think that there is someone actually writing these letters. That's what's really interesting, the way the whole process is set up. And it made me think, prior to this decision, which we'll get into, it's almost as if the people who owed more money, greater than $100,000, had a little bit better of a situation than the ones under $100,000 because they had someone show up, even though that, you know, what the purpose of that was for, who knows. But at least they have a point of reference and someone that they can work through.
Well, and that's a doggone good point, Bob. And I make that very point in my book, How to Get Tax Amnesty, that when you're dealing with ACS, you're dealing with a computer. Now, there's a way to do it. There's a way to handle it. And there's things that you can say and ways that you can proceed that will get, you know, knock the computer off its tracks, so to speak, so that it doesn't doesn't go to the levies and the seizures. But you are absolutely right. When you're dealing with an individual, a person that can listen and respond, you generally have a better chance of getting some resolution, making a deal that's reasonable under the circumstances. And the whole trick is to get your case in front of somebody that you can deal with, that you can talk to. And when you're with ACS, generally speaking, that's not impossible, but it's difficult to do. For example, you can call ACS. If you get one of these letters in the mail that says, "Dear Mr. Smith, you owe us $14,000, you better do something about it. Here's our phone number." You can call ACS. But now we're talking about the level of service issues and the wait time issues that we started the program with. You might sit on hold for 3 hours and give up and hang up before you ever talk to somebody at ACS. And so it's a very frustrating process, whereas if someone knocks on your door, I mean, that's an upsetting experience, right? Nobody wants a tax collector knocking on your door. Mr. Right. Smith, I'd like to talk to you about that, $100,000 you owe us. Honey, get the checkbook. Let's write it. That's a disturbing proposition.
Sure.
But at least now, this guy's going to give you a business card, Bob, with a name and a phone number that you can call on the phone and say, "Hey, let's talk about this. Let's figure out a resolution."
So, prior to this being made, what was the whole purpose of the unannounced visit versus today? They're not going to be doing this. I mean, how are people going to be handled with this new decision? And talk a little bit about the decision.
Yeah, first of all, the decision says that revenue officers will no longer make unannounced visitors to citizens' homes and businesses for tax collection purposes. Now, note, this policy applies only to revenue officers. Revenue agents, these are tax auditors, they never make unannounced visits anyway, ever. They never did, they never will. Yeah, if you're under audit, they send you a letter. "Dear Mr. Smith, you're being audited. We want to look at your books and records." That's a notice in the mail. Always, always, always. Special agents are the criminal investigators. They always make unannounced visits. And they're never going to stop making unannounced visits, Bob, because they're criminal investigators. They want to catch people off guard. They want to talk to people, who haven't had a chance to sit down and think a little bit. They want to talk to people who haven't lawyered up. All right? These are the criminal investigators. So they always make unannounced visits. So we're only talking about tax collectors, and we're only talking about revenue officers, so therefore we're only talking about high-dollar cases. And what the revenue officer would do in a high-dollar case is he would put together a package of material, he would drive out to see the citizen, knock on the door and say, "I'm Fred Jones from the IRS, and you've got this delinquent tax liability, and I need to give you some papers." And at that point in time, Bob, the revenue officer will serve a final notice of intent to levy on the taxpayer. And this is the notice that says, "Look, the string is out. You owe us this money. We're here to collect. We want to get some information." And the revenue officer will give the taxpayer at that point a very simple choice: either write me a check for the tax or provide me with financial information that I can use to figure out if there's some alternatives here to full pay. So the revenue officer is asking for payment or information, one of the two. Now, most people can't pay, so now the revenue officer is going to give them some time to get the information together. This happens in a conversation that lasts maybe 15 or 20 minutes. It's generally very cordial. It's as non-confrontational as it can be under the circumstances. These revenue officers aren't there to kick the door down. They don't show up with 20 guys. They don't even show up with 2 guys. Normally they go up by themselves. And revenue officers don't carry weapons, so it's not like they say, "Hands in the air where I can see them." None of that stuff happens. That only happens in the movies when it comes to tax collection. And so what they're going to do now is just mail the letter out. Well, that's what they do in the vast majority of the cases anyway. They mail the letter. The letter comes from ACS, only this time it's going to come from a revenue officer. So in terms of practical effect and impact on people's lives, it's not going to be any different. It's just no difference.
So one of the things I want to go back over and make sure that everybody heard, because this is a very important point to make, is that when you get this final notice, it's an intent to take an action, meaning that you have some days in front of you to get this thing squared away. It's not going to happen tomorrow.
Yeah, that's exactly right. It's a very good point. The final notice of intent to levy gives you 30 days from the date of service to do one of two things. Either pay the tax or file a request for a collection due process hearing. If you file a request for a collection due process hearing, there's an IRS form that allows you to do that. It's Form 12153, Request for Collection Due Process Hearing, Form 12153. If you file that request within the 30 days, you mail it to the IRS at the address on their final notice letter. That acts, Bob, as an injunction against collection. It shuts down the collection process in its tracks. And what has to happen at that point is the IRS then takes the case out of the hands of the collection function, so the revenue officer is no longer on the case. The case goes into the hands of the appeals office, and the appeals office has as their written job description to negotiate settlements with taxpayers. Their function in the collection due process environment is to figure out a reasonable alternative to enforcement action. The taxpayer has the right to challenge the underlying tax. In certain cases, has the right to propose collection alternatives, right? IRS wants all the money now, but I can't pay now, so let's make an installment agreement, or how about some penalty relief, or I can't pay anything, or how about an offer in compromise? There's any number of collection alternatives, all of which have to be evaluated by the appeals office to the extent proposed by the taxpayer, and then they have to come to some reasonable resolution. I'm telling you, Bob, it's probably the most important right that taxpayers have.
Yes.
Everybody needs to understand this collection due process appeal right, because it is a critical tool in leveling the playing field between the IRS and delinquent taxpayers.
So real quick, Dan, we got about a minute left. The IRS commissioner said they gave 2 reasons for stopping these unannounced visits. Talk a little bit about that.
Well, the one reason they gave was to ensure the safety of revenue officers, as if there's a shootout every time a revenue officer comes to the door. I don't know of any examples of that happening, Bob, where a revenue officer shows up and just serves the papers, the final notice paper, and the information document request, and then it grows into a shootout. It's nonsense. And the other reason is to create a sense of fairness in tax administration. And I don't know what that means either, because what difference does it make if you get the final notice in the mail or you get the final notice handed to you from somebody that came out to your house? Either way, you got a final notice. Either way, you got your collection due process appeal rights intact. Either way, you as the citizen have to take some affirmative action to deal with this situation, or it's going to go from bad to worse.
The website you can go check out where all the information for Dan and the books that he's written, taxhelponline.com. Dan, always a pleasure to speak with you. Good luck to you this next 30 days. We'll talk to you the next month.
That sounds good, Bob. Thanks for having me.
Absolutely. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. We're running out of time. I didn't get to ask this question. One of the questions I want to ask Dan was, okay, so you got a clear picture of the enforcement aspect of the IRS. The revenue officers don't carry guns. So the question is, who does carry guns? I would assume that the agents, the special agents who deal in criminal cases, probably carry guns. But that, like so many other rumors, just got blown up over the internet and went viral, that all these IRS agents were going to be armed and you were going to get your rights taken away from you. The thing that I like that Dan brings up with any of these situations with the IRS is there is a set of rules you can follow and procedures to get treated fairly. Hey, this is Bob Brooks. You got a question for me, please go to the website at prudentmoney.com and send it in, because we are all out of time. Till we do meet again next time, keep the faith and have a great rest of the day.
That's all the time we have for today. Questions or comments for Bob, or to find out more great information like what you've just heard, visit www.prudentmoney.com. Be sure to join Bob Brooks again for the next edition of Prudent Money.